When a nation with the world's largest proven oil reserves suddenly becomes the focus of U.S. economic and military attention, markets pay attention, not just politicians. Today, we're breaking down how the United States is looking to tap Venezuela's vast oil reserves after recent U.S. strikes and capture of President Nicolás Maduro, what the challenges are, and what this could mean for global energy markets and the U.S. economy. Following U.S. military action that resulted in the capture of Venezuela's president, Nicolás Maduro, the administration has turned a spotlight on the country's oil sector, long crippled by mismanagement, sanctions, and underinvestment. President Trump has stated publicly that the U.S. intends to rebuild Venezuela's oil infrastructure, even if it requires billions of dollars in investment and involvement from major U.S. energy companies. Why Venezuela's oil matters? Venezuela is estimated to hold more than 303 billion barrels of proven oil reserves, making it one of the largest reserves on Earth, larger than Saudi Arabia's, in fact. Yet despite this resource abundance, Venezuela currently produces only around 1 million barrels per day, a tiny fraction of its historic output and less than 1% of global oil supply. The reasons are structural: years of underinvestment in oil infrastructure, loss of technical expertise, decades of political volatility and nationalization, U.S. and international sanctions, restricting capital flow and operations. So the question isn't just how much oil is in the ground, it's whether it can be pumped and exported profitably. Right now, only one major U.S. oil company, Chevron, still operates in Venezuela under a special waiver, accounting for roughly a quarter of the country's modest oil output. Major firms like ExxonMobil and ConocoPhillips exited decades ago after Venezuela nationalized foreign assets. The U.S. government is now pushing other energy giants to consider re-entry, but this is not straightforward. Legal, financial, and political risks are major deterrents. Rebuilding Venezuela's oil sector won't be easy. Infrastructure decay. Pipelines, refineries, and drilling equipment have deteriorated due to lack of maintenance. Bringing them up to modern standards will require huge capital investment. Heavy crude. Much of Venezuela's oil is extra-heavy crude, which is more expensive to process than lighter grades. This limits refinery compatibility and increases costs. Political and legal uncertainty. Investors need stability and predictable legal frameworks. Venezuela's history of nationalization and regime change makes long-term investment riskier. If U.S. oil companies were to invest significantly, oil production could increase over time, potentially easing global supply constraints. U.S. refiners, especially those built to process heavy crude, could gain better access to compatible feedstock. In the long run, more Venezuelan crude in the market could help moderate price volatility. However, analysts caution that ramping up production to pre-crisis levels could take years of investment and political reform. Potential benefits: new revenue and jobs in energy sectors, greater energy security and diversification, renewed trade and investment ties with the region. Risks and realities: large capital cost with slow payoff. Political instability could deter investors. Even with U.S. interest, output growth may be slow. Global markets might not react immediately due to oversupply factors. A question viewers often ask is, will this lower gas prices? The answer is, not right away. Because Venezuela currently represents a small share of global output and U.S. oil production itself is strong, any potential benefits would show up only after years of ramped-up production, not overnight. Meanwhile, energy prices remain influenced by broader global supply and demand dynamics. Venezuela's oil story illustrates a fundamental economic rule. Resources alone don't create value. Production, investment, and stability do. Whether Venezuela becomes a major player again depends on decades of rebuilding and political clarity, and that will shape markets, companies, and energy access in the years ahead. If you want clear, practical explanations of how global developments affect markets and your money, subscribe to Wealth Explained. Because understanding finance means understanding how world events tie into real economic outcomes.